Oh, hey, hey, what's up, traders? What up, investors? Ken here from Dyslexic Investor, and thank you for wandering back into this crazy universe of stocks and options and everything. Greatly appreciate you for stopping by. If you haven't already, I would greatly appreciate it if you hit that like and subscribe down below. Yes, I know you saw the title. Ken's talking about Tesla once again. I know. It's a hard. I have an addiction. I have an addiction to the Tesla. I need help. That being said, all the joking aside, if you haven't already, check out those affiliate links down below. Greatly appreciate it to help support the channel. Check out the Patreon and the YouTube membership tab. And you also get some perks when we go live and get some really cool emojis. I'm actually going to add a new emoji, maybe doing some kind of like an ape face. Because the bulls, the bears, maybe a pig and an ape face. So I think I've unlocked a couple more tabs there. Okay. I'm going too much off a tangent. Let's just kind of jump into the whole slew of things. The Model Y. So Tesla, from what my understanding, on Sunday, today is Sunday, they pulled the Model Y Standard Range Plus. So this was a model that was like right below the long range, because again they had the Standard Range Plus, or that they were looking to kind of create a standard range, which was in around the $41,000 price target, so significantly less than the performance and of course the long range. But with that very significant price cut, you got very low mileage on it, like the range on it. Like it was sub like 250. It was like they said it was around 244, but actual miles driven on hills and things like that, it was around like 220 to 200 miles in range. But there's a lot of speculation what's going on here. So with this potentially removing of this, and then they also Tesla also cut the price of its base Model 3 by 1,000, which is fantastic, and they're also raising the price of the Model 3 and Model Y Performance of 1,000. So it's kind of like a not a switch and bait kind of scenario. They're just like moving money around from one slot to another. So this could be on demand. Like how many people are actually going for the performance, not the long range, and kind of vice versa. So we can see a different breakdown on that. The also thing is very unclear. So as we are speaking now, we're going to be jumping to the chart. The two charts we're going to be really looking at is, of course, Tesla and, of course, GM. So it's unclear if this is just going to be a short-term thing. Looking here on the article from Investor Business Daily, that they highlighted this in their weekly report, saying this could be due to demand. It could be to industry-wide chip shortages. And then basically trying to ramp up production on a new variant model. It just might not be in the cards or in the logistics of having that possibility. Then there's also the talks about President Biden putting out his new bills that would give larger tax incentives or tax credit to EV models. Of course, switching us from gas guzzlers or ICE cars and combustional engines to the EV stuff. Of course, with GM, you have their models coming out. You have Ford coming out with their SUV, like yeah, the Ford Mustang SUV really throws me off. We have Volkswagen as well, and those are eligible for $7,500 tax credit. So making these crossovers substantially cheaper than the Model Y. So the Model Y, it's still not like that premium kind of scenario where it's kind of going for like maybe like a BMW X3-ish kind of thing on like the gas comparison. But it's still, I think they need to highlight the technology more. Like I read a crazy article, and I think it was even on the Joe Rogan podcast, and I looked into it more, where the airbags in a Tesla will fire differently depending on where you're sitting on impact. So for example, if you're leaning forward to change the AC, the airbags are going to fire slightly different because they know what part of the chair you're sitting at, which part of this where more weight was. It's just fantastic technology, and it keeps on getting me spicy, and that's my addiction, folks. It's my addiction. I need my Tesla. Anyways, you guys are probably thinking I'm crazy. I haven't had a cup of coffee. I'm actually gonna have a cup of coffee after this because we have a live stream coming out tonight at 9:30. So let's go ahead and just kind of jump into the charts. Of course, we're going to be looking at Tesla, and we're going to be looking at Ford and GM as well. Both going to be fairly competitive in the sense of trying to get those EVs out there, in the sense of to the masses. We're not talking about the tech heads on the sides of Tesla majority of the times. So that being said, Tesla hasn't been a really fun pony to ride, as they say. Really hit that $900 level right before earnings and has been very choppy. We've kind of bounced off that 50-day a couple times here around that 765, 768, basically closing on the week down, which is very strange to say about Tesla because, again, the stock has been nothing but a rocket ship, lack of better words. But again, if we highlight this again, this thing took off when it got into that S&P 500. Now Tesla is part of the big boys. It's weighted within the S&P 500. So guess what? It's going to go with the tide of where the S&P 500 was going to take it. So it's no longer an independent honey badger, independent rocker just going through space trying to go to the next universe. It's going to be tethered to the S&P 500. So people are going to start getting used to that, honestly. I think we're kind of seeing that coming into the week because, again, it was really, again, S&P 500 was very choppy this week, NASDAQ very choppy, and that is Tesla is that new component that we talked about last year. But on the flip side, are people actually waiting for that tax credit to potentially purchase a Tesla? Maybe. I think so. Could that be the next catalyst? Sure. Gigafactory Berlin could be the next catalyst too. You just never really know. There's also could be some negative stuff if Elon's tweeting all about this Bitcoin stuff and the SEC starts throwing red flags at him. There could be a lot of other things that can go wrong too. I'm not saying it's all peachy and green on that side of that lawn, but again, looking here at the chart, we are seeing the 5 and 8 cross through the 21 EMA. It's almost crossing to the 34 EMA, which is a little bit not a, oh my gosh, we don't want to have a crash here. But again, we're looking for that short-term support around that 760 to 750-ish range. If that doesn't hold, we're going to be coming potentially down to the fib number here around 720 to 722. And that's going to be the support levels for potentially the moves that we could see this week. Again, there could be an outlandish move and it could pull back all the way to 600. I don't know. Like, I'm just looking at the short-term side of stuff, things. People are very short-term oriented right now on trying to holding positions here. That being said, to the upside, really need to get back above that 21 EMA. So it's basically hitting it back above 100 or 800 to 820 would be a nice little chop zone. Again, we can just kind of chop here around that 800 for some time again, because again, we've had this large move here basically from $400 all the way up to this level we're currently seeing it. So that is a pretty substantial move. Looking here on the weekly chart, look at this. We came right down to that parabolic SAR dot here, okay, around at 763. And we're still holding that trend. So that overall trend has been very much holding us tight here. As you can see before, Tesla has like this staircase stock trend pattern where it has like this huge bolt higher, some chop. Well, that was due to the pandemic, but then it kind of runs up for a little bit, trades sideways, runs up for a little bit, and we could trade sideways for a little bit, maybe even a little bit more pullback, and then we'll get that next run higher to try to break above 900 for that goal to potentially hit $1,125 to $1,200 price target within the old Tesla. So that's looking at Tesla. Let's kind of go back to the daily chart here, and we're going to be looking at GM. I know, boring GM, but listen, folks, like GM, they're a competitor. They really are. You have to be mindful about this and looking at like, hey, I know it sounds boring. It's GM, blah, blah, blah. But guess what? They have a lot of money to throw around. They're a very large competitor in the market. So you got to keep an eye. What is the famous art of war saying of keep your friends close, but keep your enemies closer, or whatever? I don't know. Maybe Warren Buffett said that. Maybe even Elon said that. I don't know. You can Google that, who said that. That being said, GM has been a very beautiful chart here. It's been a little choppy here. It has come down to the 34 and 50 day a couple times here, but seeing this chop here the last couple days is somewhat similar to the Tesla chart, because again, it hit that Fibonacci level, but then it hasn't really gone anywhere else. So around that $57 price target, which we've seen it hit twice already and fail. That could be a potential short-term double top, but long as it stays above this like 52-ish, 52.50 range, that we could maybe see some consolidation here and get that next run higher to potentially test that $57 range with some stronger support coming in around that 50 to 49 range, which is again that 34 EMA to those parabolic SAR dots. And then even significantly stronger would be potentially that 50-day, and also lining up with the 78.6 Fibonacci number at 47.91. And then last but not least, we're going to be looking at the Ford Mustang. So Ford, somewhat similar, again, trying to break out here as well. This is going to be pulling from a different little target. We're talking about some potential overhead resistance on the weekly chart at around 1143. So those are going to be a Fibonacci level that we've kind of been hanging around upon. We could be potentially building a base here and getting that next ramp up to potentially trying to hit that 1358. Within that target. But this chart is looking very well again. This EV stuff is brand new, kind of, I won't say no new technology, but it's a very strong trend that could last for some time with the overall catalyst of potentially getting larger tax credits for these particular models once the Biden announces some more tax credits from the stimulus packages and so forth. That being said, ladies and gentlemen, I appreciate your time. I thank you for staying this long. If you haven't already, I greatly appreciate a like or a dislike if you didn't like it. That helps too. It's feedback. And hopefully we'll see you on the next live stream, which again, if you're watching this video now, on Sunday, the 21st, we have that live stream coming out tonight at 9:30, and I hope to see you there. All right, guys, have a blessed evening. Have a great trading week, and I'll catch you guys on the flip side. Peace.